Assalamualaikum and hi everyone. So as promised, we are going to discuss January 2022 test question. Alright. Okay. So in January 2022, the format for the test is slightly different where there's only one question. Which is similar to part C in the letters format for the test of ACC030. Alright, so but still, we can use the question, alright, for our discussion. So what is the instruction? Identify the effects, increase or decrease of the following transaction into asset, expense, equity, revenue, and liability. Alright, so when we decide on the effects, increase or decrease for the transaction, we need to use this accounting classification. Use the term required in the question. Alright, and then state the double entry, debit or credit, using the format given. So let's start our discussion from number 2. The owner brought in additional cash. The owner brought in additional cash of 10,000 and van amounted to 50,000 into the business. Into the business. So what happened when the business received cash and van? What happened to the business when the business received cash and van from the owner? So what happened is increase in the business asset of cash. Increase in the business asset. And then what happened when the business received van? Increase in the business asset. So where the business obtained or acquired this asset? From the owner who brought in this asset into the business. So at the same time, we have to also record the equity. So when the owner brought asset into the business, this will also result in increase in equity of the owner. Alright, so when asset increase, you debit asset account. So for the first asset, which asset account is to be debited? Cash account. Right, for the second asset, which asset account to be debited? Motor vehicle. Right. So you have two accounts in the debit column. Alright, and then when increase, in equity, you credit equity account. So which equity account to be credited here? Capital account. Capital account. Right, number 5, receive dividend. Receive dividend of 11,000 by check from HSBC Bank. So whenever you receive money, so that will result in increase in asset. What is the reason for the increase in asset? Due to the dividend received, which is the revenue. So increase in asset, you debit asset account. So what asset account affected here? You receive dividend by check. So cash at bank or bank account. And then which revenue account to be credited here? Dividend received. Very good. So you credit increase in revenue, you credit revenue account. What is the name of the revenue? Dividend received. Number 7. Business bought goods. Like I always say, when you see business bought good, this will result in increase in expense. Increase in expense, you debit expense account. So which expense account affected here? Purchases. Very good. And then next, amounting to 35,000 and paid in cash. So how the business bought goods? By paying cash. So paid cash meaning that decrease in asset. Decrease in asset. So decrease in asset, you credit asset account. So which asset account to be credited here? Paid by cash. So cash account is affected. So credit cash. Next, sold goods. sold goods to customer. Sold goods to customer result in increase in revenue. Increase in revenue. Therefore, you need to credit revenue account. What is the name of the revenue account here whenever you sold goods? Yes, sales, right? You credit sales. Okay, and then from the selling of goods, you receive check. So meaning there's an increase in money, increase in asset. So increase in asset, you debit which asset account to be debited when you receive check. Okay, you debit bank. Very good. Okay, owner took some goods. Okay, owner took some goods for personal use. Whenever owner took something from the business, that will result in decrease in equity. That will result in decrease in equity. Decrease in equity meaning that you have to debit equity account, and the name of the equity account to be debited is, yes, drawings. Okay, drawings. Okay, what is it that the owner took from the business? Goods. Okay, when the business purchased goods, okay, we said that expense increase, and then we record in, we debit purchase account. So when the owner took goods, expense decrease. Not only equity decrease, expense also decrease. Expense decrease, you credit expense account. Which expense account affected here? When the business purchase goods, business record in purchase account. So when the owner took goods, you credit purchase account. Okay, next, number 19. Return of defect goods. Return of defect goods purchased on 7 December. Return of defect goods purchased on 7 December. Okay, and receive cash. Okay, because why? Because on 7 December, when the business bought goods, business paid immediately in cash. So whenever the business returned the goods, okay, the business is supposed to receive the cash due to the goods return. Okay, alright. So when the business bought goods, that will result in increase in expense. So when the business return the goods, that will result in decrease in expense. Okay, when there is a decrease in expense, you credit expense account. But which expense account to be credited here? Is it a purchase account? No, you have to create a new account called purchase return. Okay, purchase returns, or return. What is the alternative name? Return outwards. Okay, return outwards. Okay. Alright, when you return goods, you receive cash. Okay, so when we receive cash, increase in asset. So you debit asset account. Which asset account? Cash. Okay, alright, so very good. Okay, number 22nd. Paid utility bills 2,800 by cash. So whenever you pay the bills, that will result in increase in expense. Increase in expense. Okay, when you pay by cash, your cash is decreasing. Your asset is decreasing. Okay, so increase in expense, decrease in asset. Okay, when the expense increase, you debit expense account. What is the name of this expense account? You refer back to the transaction. So the transaction said paid utility bill. So you open an account for utility bills. So you debit utility bills. That is the name of the account. Okay. And then decrease in asset. Okay, decrease in asset, you credit which asset account? Cash account. Okay, cash account. Very good. Alright, next. Business paid its staff salary. This is another example of expense. Business expense. Staff salary. So increase in expense. Increase in expense. Paid by check. So money in the bank decrease. So asset decrease. Okay, asset decrease. Okay, increase in expense, you debit look at again the transaction. Okay, so the business paid for what? For the salary. So you open salary account. Okay, salary account. Okay, paid by what? Paid by check. Paid by check meaning the money in the bank, the money at the bank is affected. So credit bank. Why with credit bank? Okay, because we have decided that asset decrease. Asset decrease, you credit. Credit asset account. What asset account? Bank. Okay. Paid rental. Paid rental. Okay, this is another examples of expense. So increase in expense. Increase in expense. Paid by check. So decrease in asset. Okay, what expense account to be debited? Rental. Very good. Okay, which asset account is affected here? Paid by check, bank. Yes. Okay. And the last one. Business took some loan. When the business took loan, the business need to repay the loan in the future. The business has the financial obligation. Okay, so increase in liability. Increase in liability. Okay. And the money was transferred into the business bank account. So now the business has additional money. So increase in asset. Increase in asset here. The money was transferred into the business bank account. Okay. Okay. All right. Increase in liability, you credit. So you credit bank loan. Increase in asset, you debit. Okay, which asset account to be debited? Okay. Right? Okay. So that's it for the discussion of question 1, January 2022.